Hello traders, so welcome to another lesson. So we are almost halfway through our course and I know you're learning a lot. So today we're going to be looking at order flow. So initially we have looked at the previous lesson. We've looked at what market structure is and how we can identify it in price. So we have also looked at market structure break, which we have said is a more longer term market structure shift in short. So today we're going to be looking at order flow. So in this chapter we're going to be focusing on order flow and bank sponsorship. So let's begin with order flow. So what is order flow? So order flow, I'll simply define it as a one directional movement in the market that intentionally goes for a target in price action. So if you have a fair value target, for example a fair value gap or another block that the market is drawing towards or it's headed towards, then it will create an order flow that will lead towards that target. So it will typically not stop until that target is hit. So I've seen actually order flow to be a very powerful tool to use in your analysis to gauge. Mostly I use it, or rather you can use it to gauge maybe the direction of the market in a longer term basis, especially when you're dealing with higher time frame perspective. So how do you identify order flow in price? So number one, the higher time frame. So the higher time frame is the first thing you want to use in identifying order flow. So for instance, let's say a fair value gap or an order block has been hit, or some form of liquidity has been taken in the higher time frame. And when I talk about higher time frame, I'm talking about the monthly, the weekly, and the daily chart. Daily chart minimum. So let's say, for example, a fair value gap in the monthly has been hit. Then the market now takes out liquidity in the lower time frame. For example, now the daily chart. The daily is now lower to the monthly. So liquidity is taken in the daily. And then you get a market structure shift in the same either daily or weekly chart. Then you get now you start seeing the market now creating new fair value gaps in that direction. So in the direction where the market structure has shifted, you get new fair value gaps being created, new order blocks, and as they're being created, they're being respected now in the direction of the order flow. So that order flow will lead towards a higher time frame target. For example, another fair value gap or order block above price. For example, if you're going higher, you can see that the market will lead towards that target until it hits it. So that's what I'm calling order flow. It will flow towards that target until it hits it. And then you'll find that the market, anything on the left side of the chart, the market will take any opposing fair value gaps, any order blocks, and any short-term highs. It will be just going through them in a dynamic manner. So the rule of thumb that I've found to be useful is always focus on the current order flow until it changes. So don't try and maybe pick the top or the bottom, depending on whether you're bullish or bearish. Just focus on the current order flow. If maybe the weekly order flow is bullish, just focus on that order flow until you hit that target. And once you hit it, you will see that the market will give you more information. Then from there, you'll determine if the order flow is continuing to another target higher than the one that has been hit, or it will start shifting. So from there, you'll just gain more information and you'll determine from there. So don't try and pick tops and bottoms. So we'll be looking at an example. So this is an example of a bullish order flow. So as we have outlined, the first thing you want to see is you want to see sell side liquidity taken out. If you're bullish, you want to see sell side liquidity being taken out here. And then we had a higher time frame daily order block. So remember, this is a 15 minutes chart of the Euro USD. So we had a daily order block being hit right here, and then the market took out sell side liquidity from previous days. Once it took out those sell side liquidity, you want to see a market structure shift. So I've outlined here a market structure shift which began from this high, and then you want to see it now create this new imbalance. So once it creates this new imbalance, once the market now comes down, this is the first point where you want to gauge if order flow is shifting or not, or if they're establishing a new order flow. Because remember, the order flow was already going down from this high. It was going down because we were creating imbalances, taking out short-term lows being broken. So it was continuously moving lower. But now we are seeing a potential shift because of a higher time frame fair value point being hit. So this is an order block. So once it starts respecting this opposing fair value gap and then takes out this high, that is when our order flow, we will now determine that the order flow has shifted and they have created a new order flow. So you want to see it now continuously make higher highs until it reaches its targets. So whatever target the market was reaching out for up there, so you can see it was still respecting even during this time here. So it came down all the way to this order block, just to retest it and continue higher. It even came and took out this high. So that's how you want to determine order flow. So that is what I'm defining as order flow. So anything opposing now, once we establish this order flow, anything opposing, any order blocks here will not be respected because we're already in a bullish order flow. Any imbalances will be taken out easily. So you don't want to see any imbalances being respected if the order flow has been established as bullish. On the other hand, the bearish order flow, what you want to see is buy side liquidity being taken out. So this is the weekly chart. So a higher time frame is now the monthly fair value gap and another monthly fair value gap here. So we are seeing actually a bearish order flow being established here until we hit this target. So once this monthly fair value gap was hit, we see liquidity being taken out. So that is now the beginning point of us hunting for a potential order flow shift. So once you see buy side liquidity taken out, you want to see a shift in market structure. But in this instance, it's a break in market structure because this is a weekly chart and it's more significant. Look at how many weeks this market and months it dropped after breaking this market structure. So you want to see continually after it breaks this market structure. Now you want to see new bearish fair value gaps and order blocks being created and respected. So any new order block like this one, once it was broken, confirmed, you want to see it being respected. That is how you define order flow. That is how you know that order flow is being respected. It will continuously take out lows like this one. It will continuously take out lows and create new imbalances and new order blocks. So we are seeing new imbalances being respected, new order blocks being respected, like here. This is another imbalance, this is another order block. So once it hits, you are not going to be sure if this market will respect that monthly fair value gap or not. But what you want to do is you anticipate that it may respect it and change order flow. If it doesn't, it will just clearly show you by breaking through that imbalance of that fair value gap. But you want to see such a response if this order flow is being shifted. So you see clearly that the order flow shifted, created a new imbalance, started respecting bullishness rather, after this downtrend ended here. So the key takeaway in this lesson, focus on the order flow in the monthly, weekly and daily chart. Don't go into the 1 minute and start determining direction from there. You want to focus on the monthly, weekly and daily chart to give you general market direction. So once you have the direction, now when you're doing the trading or scalping or swing trading or whichever style of trading you'll be doing, you will use that information, that order flow in the monthly, weekly and daily chart to now be able to position yourself intraday or even a scalp. So what you want to be doing now after this lesson, you want to identify order flow, both bullish and bearish in price action, annotate them and journal. So you also want to identify higher time frame levels that were used to establish or change order flow, and go into maybe your lower time frame and see how it responded or how that order flow was established and how it was maintained until we hit the targets. So thank you so much for watching.